In China, we have seen certain areas booming while others have fallen. Massive quantities of stimulus has been entering the system since the financial crisis. That still goes on today. Subsidiary companies of the government prop up equities, real estate, and virtually everything else. Where is this heading? You came here for the truth, so let me unveil that for you. Today we're going to talk about China as well as other issues. Let's begin. Softened asset growth for all banks in China. And you can see what has happened recently over these past few months here, that it has declined. In fact, it has come down quite a bit. If you look at it since the financial crisis, it is clearly heading in a downward trajectory. And this is all the while printing up trillions into the system, trying to get it going, trying to get it kick-started, but it ultimately doesn't work. On the right-hand side, China banking assets monthly change in balance. And you can see that this has also come down a little bit here. Now, this is just one aspect. You can't just look at this and say, the sky is falling. It doesn't work like that. So let's cover a couple more. New short-term household lending, which includes credit card, debt, and car loans, rose more than 80% to 200 billion yuan, that's $30 billion, in November from a year ago, and nearly trebled from the previous month. Now, look at China as a whole, and you will see that it's a big economy. There's a lot of moving parts. They are definitely importers of a lot of industrial metals, a lot of agriculture that they are consuming, and it's a very important country globally. And of course, many countries see China to be much more of a global power in decades to come. But that doesn't mean that they won't experience downfalls along the way. China has been cracking down on risks to the financial system due to excessive leverage, and has recently zeroed in on fast-growing, loosely regulated micro-lenders that make unsecured cash loans. This is how you get an expansion to go ballistic. This is how you get all of that frenzy to occur. You get the people who generally wouldn't be able to accept these type of loans, wouldn't be able to take them on, and they just get them anyway. And that's been pushing up these markets. You have seen on this channel, I'm sure you've seen them elsewhere, but they are building a new building, a condominium, and there's a lineup down the street for people that the building hasn't even been built yet. And they're already there lining up. They have real estate agents down the street. They have investors. They have everybody's ready to go. And they will buy every single unit in that building. The same thing happens in most major cities. But it doesn't mean that what is underlying it is natural, is sustainable, and won't be met with its true fate at some point. All of this has been relying on stimulus to keep it going. But even the central banks know that this is a failed policy. They all know that. If they would believe 100% that this would not create any hyperinflationary scenario, they would just give every single person a quadrillion dollars and they would call it a day. Because therefore, everybody would spend like crazy into the economy. But they know that's not how it works. They have to give it out in little bits and pieces, and they choose who gets it, who doesn't. The crackdown on micro-lenders followed warnings from the authorities on rising household debt here, okay? That includes mortgages and consumer loans. When I looked at the statistics, they're a fraction of what we experience in Canada as an example. Still, they have grown to a large degree. And that's not good. You don't want to see that. You definitely don't want to see that, right? All right. Strong growth of retail loans was driven by consumption loans from low base and credit cards. So you'll see that here in a chart form. Just trying to show you here. I thought this would be a good visual for you. You can see what has happened more recently here with the consumption loans just going off the charts here. Seemingly anyway. All right. China property prices year over year. And I'm noticing this decline occurring. But if I look at the major cities and I look at a lot of these different indexes that I see the frenzy, I see the lineups, I see a lot of money heading towards it, as I covered in the second article. And to me, I think that this could be something. Have we started to see it break? Because of course, you can't just take a country as a whole. Saying that, what's happening in China is definitely a generalization. But when you start to look at individual cities, you get a different picture. But regardless, as a whole, China property prices year over year have begun a decline. Let's keep our eyes peeled on this. I think this is important. I think that people have been stretched to the maximum. I think that they are at a level of debt that they don't want to take on much more. Maybe their money is right now at this time is going somewhere else. They wanted to flee the country, I think, more often than not, because as they have that ability to get the money out, they'll take it. If not, they don't want to leave it in cash. They want to invest it. So it goes into property. You do see speculation. You do see a lot of things occurring right now. However, let's keep our eyes closely peeled on the Chinese real estate market. I think it is very important. Manufacturing PMI. What we are seeing here is the US, in fact. Can you believe this? An increase over the past few months in the PMI. Now the services PMI has declined in that same time frame. Services, what we are seeing here is potentially a lot of those retail type jobs not really doing well. We are seeing big businesses at this time either having their mergers and acquisitions, maybe they are closing up shop. That's happening quite a bit. I'm seeing that a lot. You're seeing the closing of all the malls. You are seeing some changes in the economy, that's for sure. In terms of manufacturing, I have really realistically no explanation for why this is rising because, quite frankly, I don't believe it. I simply don't believe it. There's no manufacturing coming to the US in droves. It's just not happening. I mean, you have little bits and pieces here and there, but ultimately, businesses move offshore. That's what they're doing. If something changes in the coming days and weeks and months, maybe. But at this time, no, I'm not buying it. And this is a very interesting chart. Asset holding gains and losses through the last 7 business cycles. So you can see it's a little messy to look at, but we've already surpassed what had happened in these other cycles. So at the bottom, you're seeing years from the prior asset price trough. So for the last time it fell, this is how many years it took. I think we will definitely be surpassing even, the length of the 90s. I don't think that this downfall is going to be nice and easy. I think it's going to be quite catastrophic, and we will see what's going to happen. Look at today. This boom has been unshakable. If you think about it, there's been some times after QE3 ended, the market was basically going sideways for quite a bit there. But the confidence was restored after the central bank made it very clear that they will destroy the currency if needed. And then you had all of the other countries coming out, whether it was Bank of Japan, let's say, or the ECB or others, they all said we're going to put our money into US equities, we'll get this market rising. And so this time, more so than ever before, central banks have become hedge funds, they become gambling institutions, and that didn't happen before. And that's always discounted, every single time. Nobody thinks about that, or they ignore it. And that's, that's their own decision. Now, Saudi Arabia, $19 billion stimulus will prioritize housing and small business. This is to bolster private sector growth with money to support housing construction, as well as fee waivers for small businesses. It's over a 4-year period. I personally don't think this is enough. I think that they have a lot to go, because if they want to transition away from a completely 100% oil-dominated economy to anything else, you're going to need a lot more than $19 billion. That money will be evaporated very fast. But we'll see what occurs. I think that if oil doesn't rise in the next little while, I think Saudi Arabia is really going to be in big trouble. Yes, they can get the liquid black gold out of the ground very cheaply. That's what's important. But it's still on a long term. I mean, this has been going on for quite a while. The price has been subdued for years, and they're hurting because of it. Maybe they're being supported in the back end, but that's anybody's guess. All right. I just did a video about this. And again, this information came out talking about California and considering taxing drivers for every mile they drive. Look at this. They're thinking, how are we going to track people? Well, you can do it manually. But of course they say it's expensive, it's not going to be accurate, I don't know, it's not a good thing. Then we can do a plug-in device, then they say, well, technology moves very fast, this is probably not the best way. Then they say, okay, well, we can have everybody's cell phone track them. And then say, well, maybe we'll look into it further. But that's probably the way they'll do it. I mean, a lot of these cars have it built in, but they want you to opt in. And by giving them your cell phone, an app, or whatever, however they'll do it, it's going to use location services. It's going to be able to track you. And that's the way they'll do this. They're going to make people opt into the system and ultimately into their own, method of control. This is Agenda 21, 2030. This is the Hunger Games. This is what's going on. It's very clear to me. This is just one step of many, one point, and I want you to be aware of this. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.